Wealth creation is a journey, not a destination. It's a process that requires discipline, strategic planning, and a keen understanding of the financial landscape. But what are the guiding principles that can lead you to the promised land of financial freedom? How can you navigate the complex maze of investment options, market trends, and personal finance decisions to build a secure and prosperous future? And most importantly, what are the secrets that the wealthy know that you don't? Number 1. Invest in appreciating assets. Investing in appreciating assets is like planting seeds for a future harvest. The idea is simple yet powerful. You buy an asset at a certain price, and over time, its value increases. But the real magic happens through the power of compound interest. Let's say you invest $1,000 and it appreciates by 10% in a year. The next year, your base amount isn't just $1,000, it's $1,100. Another 10% gain on that gives you $1,210. This is how appreciating assets build your wealth exponentially. Assets like the stock market, real estate, and even certain collectibles can offer this kind of growth. The key is to start as early as possible. Even if you're late to the game, it's better to start now than never. And if you need help, many online resources and financial advisors can guide you. Number 2. Automate your payments. Automation is your best friend when it comes to managing finances. It's like having a diligent assistant who never takes a day off. Most employers offer retirement plans where contributions are made straight from your paycheck into your investment account. Once set up, you don't have to lift a finger. This hands-off approach extends to other areas of your financial life as well. You can automate transfers from your checking account to your savings account, and even set up automatic payments for your credit card bills. The beauty of automation is that it eliminates the need for discipline and manual oversight, reducing the chances of late fees or interest charges. It ensures that you're consistently contributing to your wealth building without the emotional or psychological toll of remembering every payment. Number 3. Boost your income. And number 3, boosting your income isn't just about working harder, it's about working smarter. While your day job might be your primary source of income, don't ignore the potential of side hustles. For example, if you have a skill or hobby that can be monetized, like writing or video editing, use it to generate additional income. Some people start blogs, YouTube channels, or even small online businesses that bring in a few extra $100 a month. These might seem like small amounts, but they add up over time. Also, don't hesitate to ask for raises or promotions at your job. If you've consistently performed well, make a case for why you deserve higher pay. Every extra dollar you earn is another dollar you can invest in appreciating assets, accelerating your journey to financial freedom. Number 4. Detach from what you don't need. You may also look into detachment from unnecessary possessions and expenses, just like trimming the fat off your budget. It's not about living a Spartan lifestyle, but about prioritizing what truly matters. The first step is to identify what you don't use or need. These could be subscriptions you've forgotten about, or items collecting dust in your garage. Once identified, either cancel them or sell them off. The money saved or earned from this exercise can be redirected towards your investments. Detachment is also a mental shift. It's about not getting caught in the consumerist cycle of buying things for temporary happiness. When you detach from what you don't need, you're not just saving money, you're also gaining peace of mind. Number 5. Avoid overconsumption. At number 5, there's the allure of consumerism, a significant roadblock on your journey to building wealth. It's easy to get caught up in the cycle of buying more, upgrading constantly, and living a lifestyle that you can't sustain in the long run. Overconsumption not only drains your finances, but also diverts your focus from long-term goals. The key is to recognize the difference between needs and wants. Needs are essentials for living, while wants are often influenced by external factors like societal norms and peer pressure. Overconsumption can lead to debt, which is the antithesis of wealth. The interest on debt can quickly accumulate, leaving you in a financial hole that's hard to climb out of. Thus, instead of succumbing to the instant gratification of buying things you don't need, consider the long-term impact on your financial health. Number 6. Be disciplined. Speaking of long-term, let's cover discipline now, the cornerstone of wealth building. It's not just about having a plan, it's about sticking to it, come what may. Discipline involves making tough choices and sacrifices. It means foregoing immediate pleasures for long-term gain. It's about consistency, whether it's saving a portion of your income, investing wisely, or simply not giving in to impulse buying. Discipline is what keeps you on track when distractions and obstacles appear. Without discipline, even the best laid plans can go awry. Procrastination is the enemy of discipline and the #1 wealth killer. It's easy to put things off until tomorrow, but wealth building requires action today. Number 7. Understand your motivation. Understanding your motivation for building wealth is crucial. Money in itself is a shallow motivator. It's what money can do for you that's the real driving force. Whether it's the freedom to live life on your terms, the ability to give generously, or the opportunity for personal and professional growth, your deeper motivations will keep you going when the going gets tough. These are the goals that will drive you to overcome obstacles and to make sacrifices. When you're driven by a purpose greater than just accumulating wealth, you're more likely to stay committed to your financial goals. Number 8. Leverage wisely. In the world of wealth, leverage is a double-edged sword. When used correctly, it can amplify your returns and accelerate your journey towards financial freedom. Essentially, leverage involves using borrowed capital for investment opportunities, aiming to earn a return that surpasses the interest payable on the borrowed amount. For instance, if you take out a loan with a 4% interest rate to invest in a venture that yields an 8% return, you're effectively doubling your money. However, the risks are equally high. If the investment doesn't pan out as expected, you're still on the hook for the loan, which could set you back significantly. Therefore, it's crucial to understand the intricacies of the investment you're getting into. Always weigh the potential returns against the risks involved. Leverage should never be your first step in wealth building. Rather, it should come into play once you have a solid financial foundation and a well-diversified portfolio. Number 9. Never stop learning. The world of finance is ever-changing, with new investment vehicles, market conditions, and economic policies emerging regularly. To stay ahead of the curve, continuous learning is non-negotiable. This doesn't mean you have to go back to school or earn multiple degrees, although formal education has its merits. You can keep yourself updated through various resources like books, online courses, webinars, and even podcasts that focus on personal finance and investment strategies. Learning also helps you adapt to change more efficiently. For instance, if a new tax law is introduced that affects investment returns, being well informed will allow you to adjust your strategy accordingly. Number 10. Create value. And lastly, let's talk about creating value, because in the end, it's not just about how much you earn, but how much value you can offer. Whether you're an employee, a business owner, or an investor, your wealth is directly proportional to the value you provide. For employees, this could mean acquiring skills that are in high demand. For business owners, it's about offering products or services that solve specific problems for your target audience. Investors create value by making smart investment choices that yield high returns. The more value you can provide, the more you can charge for your services or products, leading to increased income. And it's this income that you can then invest to build your wealth. Creating value is a long-term strategy. It requires time, effort, and sometimes a willingness to go the extra mile. But the rewards, both financial and personal, make it all worthwhile. So as you stand at the threshold of your financial journey, ask yourself, what does wealth mean to you? And what are you willing to do to achieve it? Your answer will not only define your path, but also determine how fulfilling the journey will be. If you liked the video, please consider subscribing and sharing so we can keep bringing more content like this. See you next time!